Welcome to the Del Walmsley Radio Show. Del challenges the status quo, questions everything, and empowers you to return to your core beliefs to make your life better. If you're ready to hear the truth and get your roadmap to the lifestyle you really want, the next hour will change your life. And now, your host, self-made millionaire, national award-winning investor of the year, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. Today with me and Tell Del is Russell Harris. Russell's out of New York. Interestingly enough, out of New York by Texas, via Texas, started in Dallas, went to San Antonio, then moved out to New York. And he's got an interesting story how he has retired his mother by investing in real estate over the last couple of years. And we want to get him in here as quick as possible and get to his story. Russell, welcome to the show.
Hey, Del. Great to be here.
Glad you can make it. And wanted to just get with you here because I didn't pre-talk to you today, and one question I did want to ask, and I'm going to go ahead and ask it right up front. You retired your mother in how long did it take?
About between 3 and 4 years. It kind of, all of her expenses were taken care of from our passive income within about 3 years, to where it was a comfortable amount with plenty left over. Maybe another year or two at the same growth rate that we were doing.
Mm-hmm. Well, it's an interesting story, the way you tell it, because when you put it together, it's such that your mom was there, didn't have enough money to retire, and, she was in peril of losing her job, and yet you were able to take a small amount of money and invest it wisely and end up, replacing her income. So that's a good thing. But the one that really caught me was the further down in your profile here was the fact that you woke up one day and from having a small amount of money that neither you nor your mother could retire on, you wake up one day and you've got over $1 million net worth. How did you feel when that happened?
We were just taken aback. I still remember calling her, like, hey, guess what? We're millionaires. And she, we've been working really, really hard over the years and in different various things and in growing the real estate business. And we hadn't looked at the financials too much. We were just focused on, doing the model and tenants and things. And we were just like, wow. We don't feel any different, but we're the same people, but it just sort of happened. That's amazing. And, it really, even today, hasn't really sunk in that, wow, and what we thought would take in the normal kind of business model of saving and putting, 5-10% of your money away in the stock market and just hoping and praying it goes up, that maybe in 40 years you might get $1 million, that it happened to us. And in such a short period of time, we were just speechless then, and even now, I'm thinking about it. It's been a few years that, it's still kind of sinking in that we really are in a comfortable financial position where we're just out really enjoying life and not worrying about that aspect anymore. We're still growing it and making sure that's going to continue and be there, but it's not something that keeps us awake or that really worries us or anything like that. It's just a huge. You can't say it enough, that just huge difference in just mindset and just overall just happiness in life and outlook on everything.
Well, now that I've dropped the big M on everybody to get them interested in your story, we need to go and start back at the beginning. You're just a young guy, and you picked this up at a very early age. You started working hard, saving your money. Pretty much the same story that I had, so I'm going to let you tell your story and pick it up from, before any of this started, when you thought you were going to make it the normal way.
Right. I've heard you say this multiple times on the radio show, and this very much describes me, that I was living kind of a life of quiet desperation. I was doing everything that you were supposed to do, and you were told that this is the formula for success. I went to the university and I got a degree in engineering, and then I went and got my first entry-level job. And it was a decent amount of money at the time for me without any big expenses. But I remember very, very quickly, this would be 2007, right before the crash. But I remember even then looking, everyone says save a certain percentage of your income, don't take on a big amount of consumer debt. And then you have to go and put in some calculators and kind of predict, all right, in the next 30, 40, 50 years, what's going to be your rate of return? What's inflation? When are you going to die? And it's just, you're like, oh my goodness, how am I supposed to know any of this? And so you play with any, and I had a number in my head. How would I feel comfortable that in that business model, if that was just my savings amount, how much of that could I comfortably subtract every year before, and then make that last over 10, 20, 30 years before I die. And frankly, Dale, the prospect was abysmal. I was, you have to, at that time when you're just out of university, your frame of mind and time frame is literally just a semester at a time for major goals and things. You're not thinking in years and decades. And so I remember thinking, okay, I haven't even worked a year, and this seems like a long time, and now I have to, it's going to take 40 or 50 years to reach those financial goals.
That's a good point I've never heard before, but that is a great point. When you come out of college, you are thinking semester to semester. Now, all of a sudden, we got to talk about 50, 60 years of our life. That's a great point. So you came out, and you did start out that way. How long did it take before you decided that wasn't going to work? And, by the way, I think there was a little bit of a problem in there somewhere that probably sped that decision up.
Yep, it was. 1 year later, 2008 happened. So I remember I maxed out my 401k, I maxed out my IRA, and then very next year I lost. And it was very aggressive. It was like, what? I heard real estate's good. I'm going to invest in some REITs. I'm going to put some money, in the tech industry. So I'm going to put money in tech and everything else, and try and be diversified or diversified, as you taught me. And I really like that. And, the very next year, I lost well over half my money. It might have been 3/4 of it just gone. And that was a huge just slap in the face of how am I even gonna get 40 or 50 years from now if I'm losing everything now?
Well, it's interesting. When you sit here, and I was just thinking about this, we got a brand new board op today, new guys behind the scenes making things happen for us here. And, so they've not heard the show. And the first show they here's a kid comes on and says, look, I bought a couple houses, and a few years later I'm a millionaire. And I think it's $1.5 million you said your net worth was on this. And they got to be sitting there going, oh, my God, this has to be a lie. This has to be a Ponzi scheme. Because they don't know that we've been doing this for 29 years. And they're hearing it for the first time. And you've got to think about what it's like to be sitting there going, I've got to get up and go to work every day and to work my butt off the rest of my life. And this guy's talking about making $1 million in just a couple of years and being done. You got the frustration, the living that life of quiet desperation is so true for so many people out there. Now, you had the big 2008 slap you in the face, so it's like me. I had the Black Monday in 1997, I think it was, what they call Black Monday crash. So we all were lucky enough to have something bad like that happen to us at a very early age. It took me 2.5 years after that to get myself retired, and I did it on single-family houses. I find your story very compelling, very interesting, that you've done yours on single-family houses also. Why don't you share with us how you started your portfolio, what made you decide to get into houses?
Sure. So, we'll fast forward a few years, of that doing that business model that wasn't working, and I happen to be fortunate that I had a coworker that had just joined Lifestyles and was buying single-family homes in the Dallas area, and he was just quietly doing it. Wasn't bragging about it or anything. But if you ask some questions, he'd tell you. And I said, well, I got to come check this out. And so I went to the office and the free workshop, and then signed up for the 2-day right after that, and was just kind of overwhelmed. So it was. The big thing for me was, instead of having money in retirement tax-free at age 59 and a half or 60, this is something that all of the Lifestyles members and, frankly, real estate investors all over are doing monthly, and then the other, instruments that you have, the cash-out refinance and things like that, where you're pulling your capital gains out tax-free. But that just blew my mind away, and I went and, I saw you. I went down to Houston, at that time, I actually drove down from Dallas to Houston because I wanted to just go to the very next available workshop. And I remember, I still had skepticism, and I remember you going right on MLS Live.
Well, we're going to have to stop right there on that skepticism. We're going to take a break. We'll be right back with Russell Harris and the Del Walmsley Radio Show.
Back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. With me here today is Russell Harris. Russell is in New York City right now, but he started here in Texas, up in Dallas, and went to San Antonio and started investing in single-family houses. As we went to break, I had to cut him off. We came to a segment break. He was talking about being a situation where it didn't seem real. It was just skeptical is probably the word he used. And so we want to pick it back up there if we can, Russell. You came in a little skeptical like most people do, and I would say should when you hear stuff like what we're saying. What changed your mind? Was it the 2-day? Where did you get the information necessary to see that this made sense?
It was definitely the 2-day workshop. So, this day starts off of just changing your belief system and why, it really helped just to address why do I have a lot of these beliefs about money and different things, and you really articulated it because that's all you were exposed to is what your parents and your boss and your teachers and everyone else, that's the business model that they're running their life and their finances by, and you just haven't exposed to anything else. And so seeing you really break it down and show a different way of thinking. And this is what, now we're going from a poor middle-class mindset to here's what the wealthy and super wealthy, this is how they think of money and wealth and things like that. Just blew my mind. And, at that point I was just open to all of the other information coming. And it was, every doubt that I had, well, what about it's tenants, toilets, taxes? How do I screen tenants? They're going to, maybe I'll make a little money, but they're just going to ruin my house after, and I'm going to lose everything. And, you hear these horror stories from other people that have tried real estate on their own, or maybe they inherited a home, and they want nothing to do with it. And you really showed, nope, here's how you mitigate that risk, and here's how you manage it. Here's how you manage the rehab, everything. So just anything that any kind of skepticism that kept coming up throughout the day, you really just addressed head on. And then what really did it for me is, okay, now we're going to show real live deals available right now today on MLS. And we're going to put numbers on them, show what it's going to cost to buy them, to rehab it. And then even, the thing that even got me even more is then you showed, what if we go and, use the concepts of more leverage or hard money. And that was it. I couldn't tell you anymore. It's like I need to do this immediately. And I remember after the first day just calling up my mom down in San Antonio, and I was like, you know what? You gotta hear what Del has to say. I think this is this is what we've been looking for. And so I got her to come up to Dallas, I think, for your next 2-day workshop, and she saw it and saw the presentation. It's like, all right, let's do it because we're not happy with our financial situation now. And that was really it. We signed up. We really wanted, we saw the value in, the experience, the decades of experience from you and then the entire team that was all over Texas and Central, the Central Texas office, Houston and Dallas. And we knew that's what it would take to get us kind of to break through our sticking points or different spots that are limiting beliefs on this, that no, here's a whole just team and really family of experience that's going to push us through that. And, at the time, too, we weren't at the, mental maturity level yet where we thought that we could take on multifamily. We were already taken aback from the single family. It's like, let's get started here. And that was it. We went and, after that, and we didn't know, did we want to do homes in San Antonio where my mom was or Dallas where I was. We met with both the mentors in both offices. I still remember meeting with Terry Gilboa and Lynn Merle the first times and really showing my goals and things, and they were like, all right, here's your goal, here's how long it'll take, here's how we can help you. And just, even then saying, this isn't something that's a matter of decades, this is a few years that you can achieve this, was really just a completely different way of thinking for us. And so, within a few months, we identified a deal. It happened to be in San Antonio. And, even then, you talk about your very first deal that you did, that there was a lot of resistance to any little change or counter offer or anything. You're like, nope, that's it. I can't do the deal. That in some ways there's a lot of parallels in my first deal. So I remember it was with, realtor, and he's still in the central office, Greg Trimble. I did my very first deal with him, and I remember the house was, it was a foreclosure, and they were listing it for $70,000. They said, you know what? I think we can bid $65,000. And then we'll go get 3 bids for contractors. We'll go look at everything. We'll get all the comps, and you're going to make well over 30% rate of return. And it was just crazy. I remember putting in that offer and just so much, and he's like, you know what? Are you ready? You guys are good. This is great. Let's do it. And the whole team was just behind us the whole way. From we'd never even before that. So we were on the cash method before that. So even the concept of a mortgage or a hard money loan, everything before that. I grew up in modest homes that my mother was able to buy in cash or cars in cash. So any of that was just all right. Now this is ours, and we're trusting the system and the rate of returns and everything. This is going to make the huge difference in our life, and just having all of that backing behind us made everything. And and I think it's you've said this many times, but your first few deals is when you're really going to blow up the mentors at the office with all of your questions, concerns, and every little thing that comes up. And then after that, you're very comfortable with your competence and confidence in the area that you've done this a number of times. Little things might come up here or there, but that's just part of it. And you're equipped and mature enough to handle it. And really with that, so after the first deal, which was the toughest, we went and we're like, oh my goodness, this worked out exactly as Del said. What's next? What else can we do? How fast? We did 4 more that year, so we did 5 total our first year. And, once you get that momentum, it's hard to stop.
Well, 5 in 1 year is a really good start, and I know myself, I did 4 in a row right away within 2 months, and that gives you so much momentum from that point forward. Hey, we had someone that called in, looks like they couldn't last on the line. If you want to call back, if you want to call in, our number here, by the way, is a new number. The number is 855-497-4DEL. That's 855-497-4335. If you want to call in, we'll get you in. We have open lines available. And as we work into this next segment here, we're going to get together and talk about some of these numbers of profits that you've made in general. You've listed them down here so we can go through, and we'll get through that a little bit. And I also want to get to, again, something about how you decided that you had to take care of your mother, because, the best plans made in the world always run into something that comes along the way that just sort of knocks the bejeebers out of them sometimes. And you were put in a situation where no matter how hard you were putting together your future and your plan, something came up that forced you to take over someone else's problem. So we'll cover that when we get back. We'll be right back with Russell Harris and the Del Walmsley Radio Show.
Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to Del Walmsley Radio Show. With me here today on Tell Del is Russell Harris, a gentleman out of New York who has been doing this since 2000 and let's see what the earliest date was here, 2013 it looks like he started, and got involved here with lifestyles, and now he's got 27 houses and 3 apartment complexes, or 2 apartment complexes, I think, and he's gone through a lot. So, Russell, you still with me?
Yep, I'm still here, Bill.
All right. I got a quick question. Don't want you to run on this one because then I want to get into some other stuff.
Okay.
But the next question is, tell everybody what happened and why you had to come to your mom's financial rescue, just so everybody out there realizes that stuff happens.
So a year and a half into our growing our single-family portfolio. Now, my mom's 66 at this time, and she loses her job. And, that's a really, really uncertain time at that age. She didn't know, is she still employable, that she was planning on being near retirement and maybe going to have a few more years. But there was a lot of uncertainty, and the truth of the matter was in savings, she just had a few $100,000. And so how long is that going to last you? But then we started looking at the real estate that we just started building. We'd been building up, so we're 7 homes at the time, and we had just over $3,000 a month in passive income, which that's cash in your pocket every month. So an equivalent pre-tax income that might be $4,000 or $5,000 a month, which is a decent amount of money in San Antonio, Texas, if you have low expenses. And so we were like, you know what? You're fine. You don't have to worry about any money. We can take care. You're going to be taken care of. You're not going to have to dip into any of your savings or worry about, stress about finding a new job or anything. You know what? Why don't we just focus on this for you full time and just really, really, really grow it? And it's been doing so well now. Let's really make it into something and really change the course of our lives and our family and anyone else, friends, and anyone that comes across that we kind of sing the praises of lifestyles and what it's done for us.
So somewhere along the line, you guys became less conservative and more aggressive. And eventually, you refinanced the cash out of your mother's home. That had to have been a scary situation. But since then, you've gone on and done 2 more refinances and pulled out hundreds and hundreds of thousands of dollars from the real estate you already owned and some money from your mother's house. How did that feel, that first refinance, going deeper into debt?
It took some convincing on my mom's side because it was her, this is her safety net. In her late 60s, her paid-in-full home. We just had to go back to, Dell really points out that a paid-in-full home isn't security. You still have liability of taxes, HOA, utilities. So it's really just debt equity. How do we get at it and really kind of leverage it and continue on? So we kind of went back and forth and decided, what are the mortgage rates now? For a cash-out refinance, and they were under 4%. Well, at this time, we're making well over 20% cash on any real estate deal, so our hurdle rate is so low to make that make sense. And so after a while, it was a no-brainer, and we took that money, and we bought at least 5 more homes, between 5 and 10. I don't know the exact number, but it was a significant amount that the little debt that was put on our home, that how we were able to leverage that out, made such a huge difference for us.
I'd say, man, you guys got all the way up to 27 homes. Somewhere along the line, you decided to try something different. Tell us how that came about. How did you decide to get into passive deals? It's a completely different direction. It's both multifamily and it's letting somebody else do the work. Tell us how that change came about.
When you hit us, the single-family homes, our model was, because I was helping her remote find deals and do the numbers. And then she was really the boots on the ground. So she was meeting the contractors. She was meeting the tenants, the realtors, looking at deals, things like that. And, we were looking at growth. This is, we have 27 homes, and we know Dell at one point had well over 100. But, she's thinking, well, I have to drive 30 minutes to this side of town, then 45 minutes here, 30 minutes here. And it's not taking up a lot of her time, but she just thinks, well, I do want to start enjoying retirement a little more and truly being more passive and living, kind of living in that way. Well, we've been to the case studies, we've seen everything. Let's go and look at some of the passive deals. We've met some of the leads in the various offices in Dallas and Central Texas, and let's see what they have coming up. And so, very, very, very quickly, we saw that the leads are very, very active in the Texas area now nationally, and so we had a few things that we analyzed and compared and talked about. What are we interested in more, a yield play or value play? And we thought for where she was, we wanted more of a yield play because, again, we're looking for monthly cash flow to take care of her expenses and then have that extra to grow our business. And so we found one that just really fit that box and criteria for our needs. And so, you know what, we're going to go and give this lead with a proven track record some money. And you know what, we're going to sit back and just collect the mailbox money, as we call it, every quarter. And we'll still be growing our wealth and our cash flow, but this won't take any extra, of our time. Even though it wasn't taking a lot of time, this isn't any extra time on ours except, reading the financials and depositing money. And that at that time, that just sounded like a great trade-off for us.
Well, it worked out well for you because it not only produced some additional cash flow for your mother and yourself, but it also created some capital gains down the way that I'm pretty sure you didn't pay any taxes on. It was just sort of tax-free because of the way you got the money out of the deal. You want to talk about those kinds of gains that were coming out of it?
So this is for the multifamily or the single
Yes,
family?
for the multifamily.
Yep. So about a year and a half into our first passive deal, the lead investor did followed the plan that they had outlined and said, here's where the rents are and the value is now. Here's what we're going to do to improve it. And they raised the value enough that in that time they did a refinance and returned back well over they returned back. That's the second deal. I'm looking at the first one. Okay. So, after a year and a half, the deal, we voted on it. So, you know what, it's gone up a huge amount in price, and we'd really like to find a new deal for this. So they sold the deal and returned back all of our money plus 50%. So, if you think about that, where before we were doing some legwork on our single family, we had to go and analyze them and meet with tenants. Here's another way of thinking is we find a proven lead, and they after a year and we're making money off them, and after a year and a half they give us all of our money back plus a 50% capital gain, which is crazy. We're making just as much money, if not more, and we didn't do anything but invest with someone in the lifestyles community. That's
crazy. And you think about that as a stock. First of all, the stock's not paying you anything, but let's say it did pay you. Let's say it's a bond, and they give you back 50% of what you paid into the bond tax-free, and you're still earning the bond. It's just unheard of. There's no other investments out there that do this type, can produce this kind of income. As real estate can. For those of you who want to call in again, I'm going to give you the number one more time here since it is a new number. It's 855-497-4DEL. That's 855-497-4335. And we've got Russell Harris here with us from New York. And Russell, as you went through this now, we're going to end this segment with this thought. It's just a minute here we've got left, and that is, you've done these single-family houses. You refinanced out money twice, I think you said, a couple $100,000. You've got equity that grew in all these houses. You captured equity in all these houses, and you earned income with all these houses. And then you have these apartment complexes that you bought into as a partner, and they went up in value, and they paid out some money in tax-free income to you, both in cash flow and then eventually they sold one and got that to you, and then the other ones they just cashed out and brought you some money. So you've got all this money, but when did you wake up and see that you were worth $1.5 million and not $200,000 anymore? I mean, when did that day occur? We got just 60 seconds here to get, actually only 30 seconds to get that out.
Yeah, it happened when we were going to do one of our first cash-out refis. So it was 4 years after doing our almost 4 years to the date. We started March 2013, our first deal. This was March 2017 that we found out that we had that much equity. So just 4 years.
There you go. 4 years, folks. 4 years, and he's a millionaire. Russell Harris will be right back with the Del Walmsley Radio Show.
Back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. With me here today on Tell Del is Russell Harris out of New York City. Started his investing in Dallas, went to San Antonio, and then eventually moved to New York. But Russell, your mother's still here in Texas, I take it?
Yes, she's born and raised in San Antonio, and she's still there now.
All right, so now that you've got this experience up and down the lines here, 27 houses, 3 apartment complexes, what's a young guy like you going to do? What's your plan for the future here?
You know, after getting a taste of the returns of being a passive investor and making the same amount of money or more in the long run, I'd really like to look at, putting our, eventually transferring over our single family all to passive. And then looking at kind of the next thing. So, my mom's already retired and really enjoying herself. And, really for me, it's to free that up to, does it make sense to go want to be a lead, or do I want to travel, or there's some other hobbies or things that, maybe I was putting off, or it was something that I thought maybe I wouldn't be able to take this up for a number of years or decades just based on time. And it's really just getting back that time.
Yeah, the one thing I would caution you, though, is to get with your consultant or your mentor and look at the tax ramification of going all passive. Right now, because you have a mix, you get to write everything off against your earned income. Excess depreciation, excess losses, anything that you have, you get to take it over and write it against your earned income probably, if it's all done right, if you've done this right.
Yeah,
but if you get to be totally passive, then all you get to write off is that income that comes from that passive deal. Any excess of that passive deal, you could not use. You would have to keep that for future passive income to write it off against. So you want to look at that. There's some relevance to wanting to keep some of your single-family houses, or if not, take the single-family houses and part it down into one apartment complex maybe. One small apartment that you have a manager run, maintenance person, the whole bit. Which, again, then your mother doesn't have to be driving all over the place. I mean, there's somebody there running it for her. And maybe she goes over once a week just to see the place, just to make her feel like it's still there.
Absolutely.
Didn't run away from home.
You just reminded me of the discussion I had with our accountant earlier this year that as I was thinking, we're probably going to slow down on the single-family purchases and move more to passive and multifamily. And, I got kind of used to year over year having a large amount of, accelerated depreciation and amortization expenses that really make this all tax-free and goes against my earned income. And I said, what's our position the next few years? And he was like, look, you guys have so much, you've really purchased them in the right way that you're good for many, 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 many years if you bought nothing else, that all of this is going to be tax-free. Now, of course, we're not going to stop. But that was just really, really something that he said, if you just stopped now and did nothing, all of this is going to be tax-free for many, many years to come until you have to worry about it. And that's just, think of where we started to now is just even those times. And you said it when I went to the 2-day years ago, but I'm still taken aback by all of that no, this is really possible, and this is where we're really living that life and having financial results that we thought really wasn't for us. That was for those other people or the people on TV or on Shark Tank or so on. It's just been amazing.
I'm sorry. When you said Shark Tank, I was thinking, nah. The guys in Shark Tank are working their behinds off. They're going to work, and they've got their little businesses, and they get up and they go and they struggle. And like the Shark Tank guys say, starting your own business is quitting a full-time job to work 2 full-time jobs to make half the money you made with a full-time job. That's what starting your own business is. This is quite a bit different than that, so I just laughed at the Shark Tank reference. I don't see the parallel there, but that's okay. The idea of being entrepreneurial is the same, and we are going that direction. So at this point right now, what are you doing out there in New York? You got a job, I take it?
I'm still in corporate America, but now since I'm less chasing after titles or income, I'm really going after jobs that I'm passionate about. So, I got my start in software development, software engineering, and it's really, that's kind of my passion and my art is taking something that's in my mind or my brain that doesn't exist and creating it and building it from scratch and putting it in a way that delivers value for other people and maybe simplifies through various different technological ways or automation or stuff. And it's allowed me to worry less about do I need to chase a different job every few years or income or things like that. It's now only, be very guarded to only take the projects and the things that I'm passionate about, that I want to get behind, that is really just so much fun for me.
Well, if you took $200,000, turned it into $1.5 million over a 4 or 5 year period of time, you think about that. Now that you have equity and net worth of $1.5 million, let's say you take $1 million of it and you do that again. You're talking about, having $10 million in the next 5 years if you get the same kind of growth rate that you had before. Now, past, whatever that saying is, they keep themselves from getting sued over on the radio. Past results do not, predict future results. We all know that. But the point behind it, the theory is, hey, this growth is going to continue to grow at some rate. And at some point, you're going to have enough income, you're going to have that decision to work if you want. And then whatever it is you do is going to just be a work of passion completely. You won't need the income. The income will be extra. You'll be doing because you want to go out there and create and do something. And I think that's really the ultimate. How about your mom? Has she started traveling yet? Is she getting closer to that, living the life that she wanted?
We're slowly getting her into that because she was really just living the last 10 years conservatively and worried about money. So we got her to Disney World in Florida last year, and then earlier this year she got to go to Disneyland with the grandkids in Los Angeles, and then I'm still trying to get her into New York. So, she's from Texas, from San Antonio, so she wants to come when there's snow. She wants to see. She doesn't realize when you live in a place that's snowing, you're not that excited about it, but when you never see any in San Antonio, you want to go and see it somewhere else. So we'll see about that. So
I want to thank you for coming on, sharing your story with everybody. And for the rest of you out there, remember this. It's not the money. It's the lifestyle.
The information and opinions you hear on the Del Walmsley radio show are those of the host, Del Walmsley, his guests, and his callers, and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Del Walmsley show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.